Good, sir.
So, good evening once again, guys, and then welcome to another session. As you all know, we've been running this thing for weeks now, and then every session or every day, what we just try to do is more or less try to achieve something. Do you understand? We started with the whole market structure. We got into zones where we did support and resistance. We did support onto resistance, resistance onto support. Today, we're going to be doing something a little bit fancy. I don't want to say, okay, let's just say a little bit interesting. And that's Fibonacci retracement and then extension. Fibonacci retracement and extension. Let me type that somewhere. Fibonacci retracement and extension. Fibonacci retracement and extension. So most of you have come across this tool. I think it's on my favorite tool here. You see this whole tool here that looks like window blinds. It's like, let me accept some people. You see this whole tool here that looks like window blinds. This one here where my cursor is. Or if you go to this side, the third tool here on your drawing tools after this whole trend line, the third tool, you see fib retracement. I know a lot of us have seen it, and then some of us might more or less wonder what it is, or some people already know what it is, but then they don't know how to use it. Do you understand? So today we're going to more or less break down what this thing is. Do you understand? And then how can we more or less use it in trading? So when it comes to what this thing is, yeah, this Fibonacci tool is just like any other zone or area of interest. What we're trying to use it to figure out is more or less where we can potentially enter a buy or a sell position depending on the trend. Do you understand? Another thing, another big rule with Fibonacci retracement is that you can only use it in trending markets. You cannot use it in the ranging markets, only in trending markets. So now, before we get to how we use it, when you plot your Fibonacci, by default, it's going to look something like this. It's going to look like this. Do you understand? So I'm going to like do how to set it up. So you guys can maybe rewatch the video later when I post it and then you set it up. Do you understand? So double click on it. So these settings I'm doing, these are not the only settings you can do, but then based off of the strategy I use Fibonacci to trade, this is like the setting you should keep it at. Do you understand? So you first of all off all these ones that are unnecessary. So all these other ones that are unnecessary, you off all of them. And then you change this first one here to minus 0.27. And then you change this one to 0.79. Then you can scroll down. If you look at what I have here, you see that I have, this is what it looks like. If you want, you can use one single color, something like this. If you don't want, then you can leave it multicolored as it was. If you want, you can use the background or you can off it and then just leave the lines. And then you move the labels. You can move the labels from left to right. Do you understand? You see that all those numbers changed. And then your text, you can change your text where you want it. And then you can change your font size also. Like now I can change it to like 14 so that it will be bigger. Do you understand? And then you should have something like this. So now, this whole Fibonacci retracement here, what we're going to figure out now is how we can use it to like get a trade. Like I said that earlier, but then I'm still trying to like reiterate it. And another thing is, like I said, we can only use this in trending markets. So there are rules to how to use it. So we're like, Fibonacci, come and then show us how we can potentially get a buy or a sell. Do you understand? So let's say it's an uptrend. Uptrend. First rule we have with Fibonacci, like I said, we're bringing it in to come and like show us where to buy or sell or how to buy or sell. But then it's coming with its own rules and regulations that we must adhere to. The first one is more or less rules on how to plot it. So when it comes to plotting your Fibonacci in an uptrend, you plot it from your most recent higher low to the most recent higher high. So let's say we have an uptrend, something like this, price creating series of higher highs, higher lows, higher high, and then it starts retracing. So now our most recent higher low is here. Why? Because this one here, the price is retracing, that's not finished forming yet. Then our most recent higher high is up here. So now, what you do now is click on your Fibonacci retracement tool, and then come to where this higher low basically started or stopped, and then click there, and then draw and then extend the tool to the upside, and then you stop at the top here. And then I want you guys to notice something. Your Fibonacci retracement tool is starting just from 1 to 0. Do you understand? The minus 0.27 is the extension. It's just hanging off. So when it comes to drawing it, you're drawing just from 1 to 0. Are you guys following?
Yes, sir.
Good. So now we have plotted it. Like we said, that's just one side of the rule. And then we're more or less bringing these two to come and show us where we can potentially buy or sell. We're not plotting it for plotting sake. We're plotting it so we can use it to trade. Do you understand? So now, after plotting it now, yeah, what you do is, after plotting it, the next thing is how we can potentially get our trade. Now, when it comes to Fibonacci retracement, the area of interest or the significant level is your 0.618 level. Why am I saying that? That's where you're looking to what? Get your entry from. So your entry is at 0.618. Do you understand? Now, the good thing with Fibonacci retracement is that it doesn't just stop at giving you an entry. It also gives you your exit. That's your stop loss and then take profit. Do you understand? So in this case now, your stop loss, that's your SL, is going to be a few pips below 0.79. A few pips below 0.79. Then your take profits is either going to be the 0 or minus 0.27 level. What does this mean? Once price comes to tap this 0.618 level, we are looking to buy. Do you understand? We are looking to buy at that level. Now, once we buy at this level, now, like I said, price might not stop at this 0.618 level. It might actually pass it to the downside. So we're dropping our stop loss a few pips below the 0.79. Why? Price can pass this 0.618 level, but then it has within this 0.618 and then 0.79 to reverse. If it doesn't and then it crosses 0.79 and then touches our stop loss, then the setup is invalid when we're using Fibonacci. Do you understand? So our stop loss is a few pips below 0.79. Now our take profit in this case is going to be either the 0. Remember, if we get that buy from here, price is not just going to continue going up forever. At some point, it might reverse. So we're looking to exit at some point. So now you see this whole 0 level. That's our resistance level. Do you understand? We're looking at once price gets to that level, there's a potential that price could reverse from there. So we're looking at exiting before it reverses. Do you understand? But then the other argument here is that this is an uptrend. And whenever we have an uptrend, after price forms a higher low, the next thing price is supposed to form is what? A higher high. And before we have a new higher high, price needs to break above what? The previous one. So we're expecting price to break above this previous one and get to at least this minus 0.27 level. Are you guys following?
Yes, sir.
Good. So now, like I said, the rules you need to pay attention to first of all is what? How to plot it. The rules, first of all, how to plot it, which in this case, plotting it now is going to be from our higher low, most recent higher low, to our most recent higher high. Now, after I finish plotting it, our entry is going to be at the 0.618 level. Stop loss a few pips below 0.79. Then we're targeting either this 0 here or the minus 0.27 level at the top here. So that being said, let's jump on our charts and then take a couple of examples.
Let's
look for an uptrend. So if you look at this market, you see that price more or less shifted structure. And then we started moving like, price created this low, this high that broke above the previous high here. And then we push down to create like this higher low, then this higher high. Now, at this point here, price started retracing. At this point here, price started retracing. And if I'm going to plot our Fibonacci retracement tool in this case, we're going to plot it from the most recent higher low, which is here. Most recent higher low to the most recent higher high. Do you understand? So now what are we looking for here? What we're looking for based off of the rules of Fibonacci retracement is now for price to come back, tap this 0.618 level, and then reverse from here towards the upside. Do you understand? So let's see if price taps it. Good. So see at this point here that price tapped it, that's where we'll be looking to take our buy from here. Do you understand? Now stop loss a few pips below the 0.79 level. Why? Because if price doesn't stop at this 0.618 level and then continues going down, by giving price that benefit of the doubt from like this 0.618 level to this 0.79 level. Do you understand? So if price doesn't stop here and then passes this level to the downside, then the setup is invalid. Do you understand? Now, where are we going to drop our take profit? Our take profit is either going to be this 0. Why? Because we have a resistance level there, or this minus 0.27 level. Why? Because we're looking at price coming to form a higher low, then push up to form what? A higher high. Are you guys following? So now, after plotting this, let's wait and then see how price behaved. So price came back to like tap it again. Let's see. Your price has tapped the 0 level. Now it's just for it to tap that whole minus 0.27 level, which it did. I don't know if you guys get the idea of this whole thing. So we're more or less, I think the first rule we need to keep at the back of our mind is how to plot it. After plotting it, the next thing we need to know now is how we enter, where we put our stop loss, and then where we put our take profit. Do you understand? That being said, let's come back here and then look at how to do it in a downtrend. So now when it comes to plotting our Fibonacci in a downtrend, we plot our Fibonacci from the most recent lower high to the most recent lower low. So now I want you guys to observe something with this Fibonacci retracement tool. Let's say I drop it here and then I start pushing it to the upside. You see that 1 is down. It starts from 1 and then goes up to minus 0.27. But then if I come back to that place where I started it and then push it to the downside, you see that it starts from 1 and then goes down instead of going up now. You see that the whole thing is looking like it's flipped. Do you guys understand? And then the values you are paying attention to are these values. Are these values outside the bracket? The values in the bracket are just the price points. Like now, you see where this one is. That one is at price point 0.69286. If you check what is in the bracket, there is what 0.69286. Do you understand? So now, that being said, let's say we have this whole downtrend, price creating a lower low, lower high, then another lower low. Do you understand? So in this case now, maybe price has started retracing back to the upside, and then we're wondering where the retracement is going to stop. So we're bringing in Fibonacci retracement now that, okay, come and show us where we can potentially get this sell. Like I said, Fibonacci is coming with its own rules and regulations. The first one being that plotting it, you need to plot it from the most recent lower high to lower low. So we'll plot it from the most recent lower high to the most recent lower low. Do you understand? So now, after plotting it, like we said, we're not just plotting it for plotting sake or for design sake. We're plotting it so that we get where we can potentially enter ourselves from. So where is our entry going to be? Same thing, our entry is still going to be what? At the 0.618 level. So entry at the 0.618 level. Now, like I said, Fibonacci retracement doesn't just stop at giving us our entry, it also gives us our stop loss and then take profit levels. So our stop loss, SL, would be a few pips. In this case now, a few pips above the 0.79 level. Then take profits. In this case, will still be either the 0 or minus 0.27 level. Do you understand? What does that mean? Once price gets to this 0.618 level, we're looking at price stopping there and then reversing. What if price doesn't stop there to reverse? We're giving it between this 0.618 and 0.79 level to reverse. If it doesn't reverse and then goes past it, go way past it, then the whole setup is invalidated. Do you understand? Now, that's why our entry at the 0.618 level, stop loss a few pips above 0.79. And then our take profit. Our take profit is either this 0 or minus 0.27. Why? So if we get the sell here and then price starts pushing to the downside, like we said, it's never going to go down forever. At some point, it's going to reverse. So we're looking to exit at the 0 here. Why we said, oh, exit at the 0 is because we have a support level there. Price can tap that support and then decide to what? Reverse. But then the other argument is that after having a lower high, what we're supposed to have next is what? A lower low. And before we get a new lower low, price needs to break below the previous one. So price needs to break below this previous one and then form what? A new lower low. So we're anticipating that price will get to at least what? The 0.27 level before reversal. Do you understand? Is there no candlestick confirmation? So what we're learning here is more or less how to use the Fibonacci retracement tool. When we talk about candlestick confirmations and all, is when we start talking about entries and entry confirmations. Sure, once price taps the 0.618 level, if you want to look for extra confirmations, you can look for it. Do you understand? So let's jump on our chart and then let's take a couple of examples. Okay, this one looks like something that could work. In as much as it's complicated, it's still something that could work. So if you look at this market, you see that price created sort of like a higher high here, a higher low. We pushed up and then we failed to create a new higher high and then we broke it to the downside. At this point here now, we're more or less starting to shift to like a downtrend. Do you understand? So as we shifted to the downside now, we're more or less looking for like a sell position. So our most recent lower high, if we're bringing in Fibonacci to show us where we're going to sell, our most recent lower high is going to be up here, and then most recent lower low is going to be down here. So if we plot it, most recent lower high to lower low, this is what we're going to have. So now, in this case now, what we're looking at now is for price to come back, stop at 0.618, and then what? Dump to the downside. Do you understand? So our sell position like this, stop loss a few pips above 0.79, and then we're targeting either the 0 or minus 0.27 level. So now let's wait and then see if price got to 0.618. Good. So if you look at this, you see that price got back to this 0.618 level and then tapped it and then basically sold to the downside. We sold to the downside immediately to tap like the 0 level. Let's see if it went back to like tap that whole minus 0.27. Yeah, it did. You guys get the idea. So when it comes to using Fibonacci retracement and extension now, once you plot it, in this case, plotting the downtrend now is plotting from the most recent lower high to the most recent lower low. After plotting, what we're waiting for is for price to go back up, tap that whole 0.618 level, and then sell to the downside. Your stop loss being a few pips above 0.79, and then take profit being at a 0 or minus 0.27. You guys get the whole idea. So that being said, anyone with any questions you can ask now before we end the session. Please, if you don't have any questions, mute your mic.
Don't change.